Hey guys, so let's talk about price action for both EU and GU today. Today is what, the 24th of June. And I'll be covering many possible entries, right? So I just want to give you a flavor on if you are trying to capitalize on markets following, the previous candle, making sure that the next candle is an echo of the behavior of the previous candle, and you believe in that system wholeheartedly, and making sure that the trend is in your direction, the immediate trend is in your direction on the 1 minute time frame, how successful and profitable you can be. So first of all, you have to have that belief system, right? You cannot doubt yourself on how you are approaching the market with the strategy. The second I want to explain is how powerful the entries are, because these entries happen again and again. Potentially, if you are looking at other swing setups, or you're looking at the generic SMC where you're waiting on larger supply and demand zones or order blocks and waiting for price to get to that zone, and then look at for an entry set up on a lower time frame, and maybe that entry develops or does not develop, and you essentially miss the entire session. But in this case, you get these opportunities throughout the day. It's up to you if you are at the charts at that time. It's up to you if you want to trade outside of those 2 hours in London and New York, because there are opportunities right across the board. But with this session, what I'm trying to do is just showcase to you what is possible and not possible with the setups, and really go into some depth of these entries. I would also go over some very advanced trading concepts, right? So if you get confused with what the primary strategy for Fortitude FX is, which is following two candles, the prime candle and the echo candle, stick to it. But for those advanced traders that want a little bit extra to see if they can capitalize on the markets and understand structure very, very, very well, then what I'm going to tell you is going to serve you pretty nicely. But again, you have to really know what the price action and how the markets move, okay? So let's move on. And I will be going both on EU, GU, London and New York. So this might be a little bit of an extended session. And I will also look at opportunities just to give you a flavor that it's not only London and New York. Typically, those are the best times, but even between London and New York, you can trade. You can trade pre-London, you can trade post-New York. If the setups are there, the setups are there. You just take an entry and you execute. Yeah. So let's look at these entries, and let's look at pre-London, right? So right before London, pre-London, we had this massive bearish candle that you see on my 15-minute chart here. So you can very easily argue, well, the one before this is a massive bullish candle, and the top side and the bottom side of that candle hasn't been broken. This is just probably an inside bar. Then why are we trading on this? And this is something that you guys have to really look at and get good at, is because you have to go to your 1 minute and really understand what is it telling you. Correct, we have a positive push, right? But if you study this candle, the long bullish candle, you have a high. Look at the structure. You have a high, you have a low, and you have a high. When the next candle was forming, the low over here, which is supposed to be strong, which has created this higher high, has been broken, which means that the immediate trend is now bearish. If the immediate trend is bearish, I want to follow that immediate trend. And that is what I always say, follow the immediate trend. Yes, the larger trend is important. Ideally, the immediate and the larger, if they are in sync, those are perfect entries, but those setups don't happen as often as you would find that the immediate trend is more powerful if you're trading in that direction, even though the larger trend might be against you. Yeah. So the immediate trend clearly is bearish, and I would argue even the larger trend is bearish now, because this is clearly the low that created that high, which is now broken, right? So having said all of that, the price is moved into this zone, and now I am waiting. So where is my liquidity right now? I always say wait for liquidity, right? This is the high that did not get broken until I already was in the entry. So this high is not the liquidity that I'm looking at. So where could liquidity be? Liquidity in my case would be right here. Yes. Just to tell you that these would also be often liquidity cases right here, which was taken out by this 1 minute 1 minute liquidity right here, right? So you had an exchange, right? Price went up, it broke this low, right? And it fell and it broke the structure completely and it got swept and closed below. So now it hasn't reached my zone, right? And I'll talk about the zone in a bit. It hasn't reached my zone. What do? I just wait to see if it reaches the zone or breaks the low. If it breaks the low, this liquidity is gone because it gave me an entry before I reach the zone. So what happens next? Price move up, fantastic. My entry could have been right here, yes. But instead of breaking the low and breaking the high, the price hovered within this range of the 1 minute candle, which is fine because it has not broken the low, it has not broken the high, and hasn't broken the low. Once it breaks the high, my entry would then be at this point in time, right here. Now, if I look to the left, the zone is what? It's efficient price action, right? Which is better than if this was reacting in the middle of nowhere of a single candle. So if this price action or if this bearish 3 candles was just one giant bearish candle, I would have not entered this trade. But because it is a down, up, down, up, down, so there is pullback obviously, even though it's efficient price action, I waited to see if this zone is going to hold or if there's anything in that zone. And what confirmed me was a strong reaction candle. Now, guys, this is what I call a strong reaction candle. It is not a weak candle where you have a giant wick closes down, then moves back up, and then you have a small body in between with 2 giant wicks. That's indecision. This is a reaction candle that tells me that the market is decided. It broke this low, an OFC change. It broke this low, this sell to buy range. It broke that. And I want to be in. So I had a sell stop right here. I did not take this trade, but the sell stop would be here. And then it's up to me. Do I want to cover this? 4.6 is not bad. I ideally keep it below 6 or 5. Or you want to just do it till 3.6. You can do either or, right? But the point is not the winner. The point is that the reaction happened at a zone and there was liquidity and you could have definitely taken advantage of this, right? And it depends on your trade management. If you were to just let it play, this could have gone you all the way to 8 hour, right? And we'll see many examples today that sort of go many hours, right? So next is where I look at this giant bearish candle. There is no opportunities. There are just 2 big candles for any stop loss. It doesn't make sense. I looked at this candle right here. See what is going on. Nothing really. This thing is reacting to, this is what I meant. All of these wicks are getting rejected from what? It is just giant bearish candle. And what I need is something, a zone, a pullback within the time frame that I'm looking at. Yes, on a smaller time frame, I know what is going on. There is something in here. But on the 1 minute time frame, there's nothing. I'm not interested in trading this, right? So it doesn't make sense. You save your money because it could easily go the other way also. And the beauty of this is that you get opportunities pretty much every 15-minute candle, right? So let's move on. Let's see if there is anything over here, price action over here. Which one is that? Oh, there. What is happening here? So we have a high, we have a low, we have a high that break through. It did not create a low, so I'm anticipating this go up, but within the candle, it's a range. Even this is not clear for me. It's sweeping the lows, sweeping the highs, closing, not breaking down below. I will not get involved. I mean, look at these giant wicks on this, right? So do you want to risk your capital on this when we know what a perfect textbook entry looks like? Or you want to risk or basically gamble on the setup? Leave it alone. Let it go by. So we delete this one. Let's look at this candle right here. Same thing. What is going on? It's just ranging, right? I'm not interested in this. It is a ranging market. Why would I be risking my capital? But yeah, why would I do this? So just leave it alone, right? We come in between here, right? And look at this, right? So we have a small candle here, we have a small candle here. What is the difference? In this case, tell me what is the trend. You have a high, you had a low, it did not break this low, went up high. Okay, now we're bullish. Now it went back down again. Now we're bearish. Then it came back here. This is the high, the last high that needs to get broken. It got swept. Now it's going down. After this high gets broken, now we are pretty solidly confirmed that it is a bullish trend, right? So if I were to come down this one, it's a different story, right? So look at this. You have high, low, high, which sets this low. So it broke this low right here. It's coming in, and you have a clear pull, goes back down, and that gun gets broken immediately with solid candle closes, right? So to me, this is the initial signs that the price is now ready to turn, right? So the signs could be here as well, but this low did not break. So this high did not break any low. So even if the price is going up, oh well, this is the high that I'm interested in. But once this high breaks this low, this high becomes strong. This is the bigger structure. Everything below becomes weak. Then it pulls back, and there is clear pullback, and it breaks the low again. So this is broken. This is strong high for me, and this is weak. Immediately gets broken with strong candles push, and now I'm looking where can I enter, right? So in this case, this low broke this high, yes, and then it immediately got swept right here. It did not give me an entry before the zone was marked, right? It did not give me an entry. So this liquidity is valid. Price broke to the downside, fantastic, right? So price broke to the downside. I could have entered like this. But again, this is the first reaction, right? The first telltale sign, that the price is now turning bullish. Do you want to now enter at the liquidation candle immediately, right? And I would definitely cover the low because that is just a 3-pip stop loss. Or would you want to see and wait till there is a strong reaction? Now, wouldn't you not call this a strong reaction? Would you not, right? Definitely it is a strong reaction. So if this breaks, I want definitely in. At this point in time, I'm not even tagged into the trade. And if this low goes, then I'm not interested at all at this point in time because the zone is gone. This reaction came from the zone. If it tags me and then it breaks me out, oh, well, it's a loss, no problem. But a 5.4 stop loss is fair enough for me because I like to keep it below 6 but when the market is really moving. Or you could have just placed it below this or below this zone. Because if this is a massive reaction, then this zone is definitely holding. And you could easily have kept it below this, below the low of this zone, which covers this as well. And this is protected now. This low is protected because it broke the high over here. So this technically should not break. And if this breaks, then we are all the way down, right? So you could have easily done this, and this gave you a trade all the way up here. If you wanted to hold it, it would have been a 4-hour trade, but a really simple 2-hour right there, yeah? So this is in the middle of the session, and these things happen all over the place, yeah? So you just have to be patient. Let that one, the prime 15-minute candle finish printing, wait for the second one open and see what is happening within this box, right? And then also be cognizant, like look at this, you have a massive drop, then you start leveling out, right? And then you have price delivery changing and it is now moving upwards. This is how price delivery happens. It just does not happen down, 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 up, up, up. This is how it happens. And then this is where you get the first telltale sign that it's changing direction to the top side. And I want to be in as early as possible for these entries to get my maximum return on those trades.